Hi guys, and welcome back to my channel. Obviously, last few months I haven't really been active on YouTube. However, I'm looking to get back into it and obviously share some new content with you guys. I know the last sort of videos we've had were all sort of weekly watch lists, and obviously that's what I'm going to do tonight. But in the future, I'm looking at doing some podcasts, sort of sit down with members, sort of live mentoring call, trade recaps, market breakdowns. It's all just loads of different content for you guys. I'm getting a new laptop soon, new camera, new microphone, so all the sort of quality will be better of the setup as well, because obviously it's great content. You need the tools to help you. Just like with trading, you need the right tools and the indicators and price action to help you sort of do well in trading. So what I'm going to do is I'm going to start off with 4 pairs that I'm currently in at the moment. So one of them I'm sort of just sitting around break even, and then 3 of them I've got scalings in, and then also take you through some of the trades that I'm looking at for this week and some of the currency pairs. Starting off, we've got sort of the Swiss franc versus Japanese yen. As you can see, it's just simple trend line. We've got the low here, next higher low, and then another higher low here. However, the higher low ended up breaking through the trend line. So let's sort of look at this. This on the daily time frame. Obviously, you see we've got this trend here, and obviously the previous high low has been marked out here. So what these curves are showing is the left shoulder, the head, and the right shoulder. As you know, this is a reversal formation. Looking at this, what we can see is that sort of after the right shoulder, we did have, say, an even star formation, which is a bullish engulfing, normally a doji, but here sort of we have this big wick to the upside, showing us that sort of rejection to the upside, and then this bearish engulfing. Then the following candle broke through the daily 50 EMA, which is one of our key indicators that we use to monitor price action, to understand with a different form of dynamic support and resistance. So now we sort of broke through on Friday, we broke through this trend line, and now what we're looking for, we'll go into the lower time frame to look at this, but we're looking for a breakthrough, a break of the previous low, and then some sort of correction, and then obviously an impulse downwards. As you can see, we've got the previous high low marked out for our target profit region, and in the head and shoulders duplication. What I mean by this is when we look at sort of take profit regions, we look at double the size of the head. Obviously here we sort of slightly double, we're slightly probably less than that, but of course that'll probably be around this area here. As this is around, say, I think it's 300 to 400 pips. But I think there's massive potential for this trade, and I really do like the look of it. So let's go on the 4 hour. And sort of look on what the current price action is looking like. So obviously here's our head and shoulders marked out. It's very clear, very nice sort of head and shoulders formation. And sort of as we can look onto the 4 hour, we can see here we've got sort of my initial entry was here, and then I've entered once again on the break and retest of the trend line. Obviously my initial entry it sort of would be move over a little bit, but it was running for free now. And of course we've got this scaling here, which obviously you can see it was on sort of Friday afternoon / evening. So now sort of what we're looking for is, of course, sort of either a new low to be made, sort of beyond the previous low, which, if I'm honest, this is sort of the previous low, but of course the previous low would have been the one marked out before, so we haven't really got the cleanest to reference from. But of course we're just looking for sort of an impulse. We've sort of had a mini retest, but I believe we might have another retest of this trend line before heading down. The next pair that I was going to go through is Euro JPY. So Euro JPY I actually broke down for some members of the trading community that I'm in, and we was looking at this trade, trying to sort of pick out how I sort of caught this trade, and this is the one that I'm quite proud of because it's one of my new record trades. So this is Euro Japanese Yen. So what we have here is higher highs and higher lows. So higher highs and higher lows are how we identify a trend and what we can use in order to understand what part of the trend we're in and what sort of stage the market is in. So obviously here we're looking at Euro Japanese Yen on the daily time frame. As you can see, I've got an entry marked out here. However, I did have a previous entry which is on this 38.2. And what I'm going to do is in another video I'm going to fully break down the trade, but we're just going to look at what's going to happen from here. So of course we've got the higher highs and higher lows marked out. We've got this channel, we broke through the channel, retested on the 38.2. My initial entry was on this 38.2% rejection, and like I said in another video I'll be breaking this down. And then since then we've had this massive impulsive move to the downside, sort of breaking and retesting 120 level as shown here, and then we reached my minus 27% Fibonacci. This is my first target profit region, so I did take out my initial trade from here, and then I have my scaling running towards the minus 61.8, and I still feel like there is more potential for this trade. So let's go on the 4 hour and just see what the price is currently looking like. So as you can see here, we broke through We sort of made this new low and retested, breaking this new this old higher low, broke it, retested the area of 38.2 Fibonacci, and as you can see, we broke back through the daily 50 EMA, and then we're making our way down. So we did see some consolidation as we would expect at the -27 as traders take out their trades and they close their trades for their profits. But I'm quite looking forward to seeing how this one can go from here. Another trade that I'm currently in is AUD-CHF, which is the Australian dollar Swiss. If we go back into the daily time frame, you can see that price is within an all-time low. So if we look on the monthly time frame, we can see that sort of dating back to sort of the start of the chart in end of 2001, we're actually the lowest we've ever been. And as we know, the famous saying in trading is to buy low and sell high. Therefore, this applies perfectly here. So sort of even looking on the weekly, we can see we have this sort of long-term trend line as a descending at the top of the channel, and then we have the other trend line here at the bottom of the channel, and we've had one touch, two touch, three touch, and then sort of this breakthrough. So what we're looking at now, if we go into the weekly, if we stay on the weekly here, we can just see sort of how price has sort of been bouncing between these two levels within this channel, and sort of the weekly 50 MA sort of right at the top here because of how impulsive price has been in the last sort of few weeks or the last month or two. And obviously what we can see is sort of this trend line that's formed. So if we now jump down to the daily, we can sort of look at this. So firstly, you can see I've marked out this area of liquidity. So these liquidity areas are what we call, in this case, a demand zone, because this is where the buyers come into the market, because as we know, if they want to buy low, this is perfect because this is an all-time low. And we did see a Morningstar formation within this area with the big bearish engulfing candle, then sort of spinning top. It's not quite a spinning top, but you can see with the next candle, the bullish engulfing, we engulfed the previous two candles and now sort of reversed to the upside. Obviously we've got multiple wicks here, so of course this looks like we've now reversed out of this area, and now we broke the daily trend line that we formed, only a minor daily trend line, but still a trend line. We broke it with a slight retest, and now we're sort of taking to the upside. This one's currently sitting around break even, as you can see, but I quite like the potential for at least a nice 240 pips here, and then of course it might even go higher, depending on the strength of the Australian dollar. As we know, it's been very weak. And then finally, the last pair I'm going to go through that I'm currently in is USD CAD. This is a pair that can be quite frustrating, as it can consolidate quite often. But when you do catch the big impulsive moves, there's many room for scaling, as I'll go through in a second. So if we just go onto the weekly, what we can see is sort of this long-term trend line that, of course, price is sort of sitting around. So as you can see here, if I just take this and move it onto the daily time frame, just to make it a little bit cleaner for you guys. So yeah, as you can see, we've sort of got this weekly trend line that's developed: one touch, two touch, three touch. Sort of then we had a fake out of the trend line, and now we're back up here. So obviously what we're now going to do is we're going to look onto the daily and sort of see what we're thinking. So once again, we've now got one of these liquidity areas marked out. This is what's called a supply zone. So this is the opposite of before, and what this basically means is that at this price, the sellers come into the market, and also the buyers are now closing their trades, and the bulls are switching to the bears. So what this means is that sort of they see this level here. This is their profit region because they know that price is likely to reverse from here, shown by all these previous wicks, and therefore they're going to look to close their trades and potentially enter sells, or the new bears will come into the market. Of course, on this we have got this 88% that I did mark out. However, we can see it broke after sort of 3 or 4 rejections. We did break through, and then we sort of faked out of it. If you kind of look at this sort of reversal off of it, so I'm still going to keep this to look at my profit region. So on this, as you'll see when I break down to the 4 hour, I've actually got 3 entries on this. I didn't want to sort of mark them all to make it too unclean for you guys, because naturally the old charts I used to have were very unclean and harder to understand. So obviously with this one, obviously you can see that here I've got 3 trades. So my first entry, if I'm looking at my MT4, is 1.32987. Then we have 1.32671 and 32503. So these are my 3 different levels that I'm sort of entered in, and I'll explain why I've sort of scaled in this way. And obviously the point of scaling basically is when you've got sort of these long-term swing trades, of course it's nice to sort of have multiple trades to catch them impulse and corrective moves, and if you get them right, they can be really cool, because you can sort of catch, say, 190 pips on the first one, then maybe 100 pips on the second one, and then sort of you sort of bank a lot more profit, but of course you're managing your risk appropriately. So you can see here we sort of broke back in, and now if we go down to the 4 hour, I can show you how I sort of got these scalings. So here on the 4 hour, you see we had this minor trend line developed, And my first scaling come off of this wick here. So this was a break and a retest of the 4-hour 50 MA. Of course, one of the first things you learn in trading is a break and retest. And then so what happened was we sort of made a few wicks here. We come down, we corrected again, so I actually re-entered. I think it was on this candle here. If I just move this over, and off of this, I just thought, well, we've obviously come back to an area of confluence. We've retested a trend line, daily 50 MA, and then this supply zone above. And my initial trade was running risk free. My second trade was risk free, around 20 pips after the correction, and now we're sort of seeing it come to the downside. At market open, I potentially can see this sort of come in a lot sort of lower and maybe even a gap. So it'll be interesting to see. Now let's sort of move on to the pairs I'm looking at for this week. So firstly, we have the DXY, which has been very interesting because of the massive impulsive move we've had. So if we just sort of look, obviously, this is something I cover every video and something you'll all be aware of. But you can see this channel that we broke out of using the reversal strategy that we teach. That's our way of trading. That's where I learned the strategy, and it's become an integral part of my trading. You can see how we reversed this 78.6% Fibonacci. And of course, that's what we're looking for Fibonacci. We're looking for these extension of retracements. When we break, make a new high or new low, we look for that retracement and then hopefully take the position off of that for a nice swing trade. Of course, here what we've seen on the DXY is this sort of massive outbreak to the upside. We broke through significant levels such as 97.5, the 98, and then the 99 most recently. Of course, with this, we then broke through our sort of extensions at the minus 27% and the minus 61.8%, and now sort of past our 99. So what I'm expecting is the massive impulse that we have, and I'll sort of go on to my Euro USD as well, why I've sort of got a bit of an idea why this could go even higher. And obviously the last sort of major high is here, which is our last major high at 99.66. As you can see here, it's very high, and price sort of hasn't come up to that in a while. So obviously if we do come here, we might even look for sort of a DXY reversal. Obviously being a dollar index, we don't trade it, but we can use it sort of as an idea of where the dollar is going to move in Euro USD specifically because of the high correlation, inverse correlation between these two. So obviously I'm looking for this sort of come higher. So let's remember this when we're looking at the rest of these charts. So Australian dollar yen, this is sort of a repeat of the euro yen trade because it's very similar setup, and we'll see in a couple of these trades. But the important part is you don't want to take every one of these trades because you don't have too much exposure to the yen, because if there is a shock in the market at all, for example in the Nikkei, which is the Japanese indice, then we might see a big sort of reversal or sort of into the other direction, which isn't ideal for us if we've got a nice long-term short trade on it. So here you can see one touch for a higher low, or sorry, for a low. Then we had a higher high, low, higher higher, low, higher, and it we sort of have this low here, low, and then we sort of have this big gap in the market. And as we know, gaps tend to be filled. It just could be over a day, a week, a month, minutes, seconds, or hours. And obviously here you can see we did sort of have this quick reversal back up to the 50% fib and the daily 50 MA, where we sort of filled this gap, and now sort of prices what seems to be sort of a triple top or maybe just a double top, which obviously has given us more further confidence with our 50% fib, the retest of the trend line, and the daily 50 MA for this downside potential. Obviously mark that as our last major low. If we just adjust this to 69.944 for more accuracy. There we go. So obviously as you can see here, that's near our minus 61.8, so quite a nice area to target with a nice, say, 360 pips or 370 pips. 370 pips. So obviously that could be a nice short to watch for. So I quite like that. Look, that's Australian dollar yen. Obviously if we go into the 4 hour, we see how the price action has been. So you can see sort of this. Okay, so maybe not a triple top, but a double top. And obviously we're just sort of consolidating on this 50 MA, and then just before the close Friday, we did break through. So definitely looking for, say, a retest, and then we can sort of look for entries off of that. We'll look at what the next trade is that we're looking at within our watch list. So the next trade we're looking at is the Australian dollar, US dollar. And with this pair, what we've got to look at is the fact that sort of we are very, very impulsive to the downside, and sort of it's going to be interesting to see how we react. So as we can see on the weekly, we're actually sort of sitting at a very, very low level, as I said, and obviously the last major low since before this was 2008. So obviously we've got this sort of demand zone here, as we know the buyers will come in because we're at an all-time low, or at the last major low. with it being equal to 2008. So if we go back onto the daily, we can see that we broke this trend line, and then of course massive impulsive move to the downside. We've had correction, then we impulsively moved down again and correction. So we might even see further downside potential. And for me, unless we break out of this trend line or above the daily 50 MA, I'm not really looking for any longs here. But at the same time, unless we're sort of breaking this last major low, I wouldn't really like to short it either, because of you have to be careful not to be caught on the wrong side of the market. So I'm just thinking as a long-term long trade, we might see some nice potential here once that DXY reverses, which probably will be around sort of this demand area. Next, we've got the CAD, Canadian dollar versus Japanese yen. So what I'm going to do is I'm actually going to switch over to oil first, and look at the oil chart, and we can see sort of where we're heading with oil, because as we know, there's a significant correlation between oil and the Canadian dollar. This is because oil is the biggest export to Canada, and it's the reason for the most of the foreign exchange that goes into Canada. And as we know, as the economy gets stronger because of the price of oil is going up, there's more Canadian dollars floating in the economy. And obviously they're making more money, so therefore it makes the economy a lot better, and therefore it's going to be a stronger currency overall. So as we can see here, we've got this sort of demand area. Once again, we're seeing this a lot in the market, and that's what we see, that price tends to be in similar zones for a lot of different currency pairs within the market. So as we can see, we had this trend line here, then we had an ascending, so sort of this wedge pattern, broke out to the upside, and then after the 63 faked out of that, and then made a massive move to the downside, which I think a lot of people did get caught on the wrong side of the market here. Now we're sort of just sitting in the zone. We broke out of this demand zone, and now sort of oil potentially is going to make its way back up like we did see here. Obviously there is a worry that maybe this isn't going to sustain, and we might break back down and sort of equal this prior low before at 42.37. But of course, if we go into the daily, we can see that sort of prices had a nice little double bottom formation, so it could be quite interesting to see how this moves. So if we go into the 4 hour, we can see price has now broke above this daily 50 MA, so that obviously is more confluence to take this long as well. I wouldn't personally take it long on oil at the moment just because of how volatile it is, but we can use this to now look at CAD JPY, sort of based off of that correlation. If anyone's got any questions about any sort of intermarket correlations, by all means ask. I have a video I can send you that's on all the intermarket correlations, and I'm sure it'll be a lot of help to you, as it was for me learning and making that video. So looking at this, we can see that we've got the trend again of higher highs and higher lows. So higher low, higher high, higher low, higher high, higher low, and then we see this is where price sort of started consolidating around the trend line, and we sort of saw quite choppy price action before making this new high. Then, like we've seen on the others, we broke down, we broke the daily 50 EMA, made a new low, sort of broke these two previous lows, corrected, made this correction and retracement to the 50% fib. We broke the daily 50 EMA and then reversed back out, so we faked out of that, and then we retested that successfully, and now we're looking to make our way down. So potentially for me, obviously CAD yen's trade a pair that I trade quite often, and I really do notice how it magnetizes between these sort of levels, between the 80 and the 83 specifically. So I'm quite looking forward to seeing whether that's going to sort of break down and sort of from the 50% fib go down to our minus 27 or our minus 61.8. I favour sort of this 80 zone, so maybe potentially not quite down to the minus 61.8, but I do feel like there is a lot of downside potential here. Let's go on to the 4 hour. You can see sort of choppy price action. We're sitting above that 4 hour 50 MA, so maybe we need to break that and retest that first before we do look at entering any shorts. Now the next trade we're going to look at is the Euro US dollar, which is obviously one of our major pairs, because as we know, it's the most traded pair because of all the liquidity that's in this. It makes it quite a safe pair to trade. And as we can see here, we've got sort of going back, we've got this weekly trend line. And we see 1 touch, 2 touch, 3 touch, and now we're actually approaching for a 4th touch. And because it's a monthly trend line that dates back to 2000, and then the top of the channel which dates back to 2008, it's a very strong wedge formation that we're having here. So we don't really expect it to break this. If it does break this, then we're going to see massive major potential. And as we know, if the dollar index getting stronger, then potentially there is a lot more effort, a lot more potential for this to come down. But I feel like maybe we're going to reach that sort of next few key levels on DXY, and then we will actually reverse, like we'll see Euro US dollar reverse here. But of course it is very bearish at the moment, so it's just something that I wanted to cover, even though that might not be a trade necessarily on it, but I definitely think it's worth watching. A bit of an unorthodox approach with the Fibonacci here is to have sort of the low here and the high, and obviously this is overall an uptrend. We can obviously do this and look at the retracement that the 78.6 is actually sort of right by price now, so it's quite interesting to see that 78.6 is sort of on this ascending trend line, and it's just sort of interesting to see that price could reverse from this level, and it's that further support to the idea of that. Now let's look on the daily. We can see how impulsive this has been, so there is it's due correction, and obviously we've been at the minus 61.8. There is a lot of potential for this to sort of correct. It's just a matter of how much does it correct or does it reverse completely. But next we'll move on to the pound New Zealand dollar. It's not a pair that I typically trade, but something you guys might not have seen from me before is this 88% Fibonacci. So basically within Fibonacci, our usual levels to use are say the 38.2, the 50, the 61.8, the 71, and the 78.6. And something I started using the 23.6 and the 88%. And I just find these are quite accurate as well for really getting them high retracements. And of course, it's this part of trading that you learn what works and what doesn't, and what works for me might not work for you, but I feel like it's worth sort of talking about, especially here. So on this, sort of we've seen the last major highs marked out at the 2.05628 level, and sort of see on 88% fib. So using the strategies before, we have sort of this break of the trend line. You see quite a nice break. The reason I put my 100 here is because these wicks sort of, the actual candle closed below, we see the sort of evening star formation. So this is sort of the major high before, and then obviously the low was formed here, beating these lows, and then we see this 88% sort of sitting here. So it'll be quite interesting to see if we can reverse from this level and sort of take a big move to the downside. But one that I'm not sort of too focused on, but it's definitely in my watch list to be a one to watch. As you can see here, it's quite choppy price action. We have sort of maybe a trend here. If I just get my toolbar up, maybe developing a trend sort of here, or even, and that's the thing, guys, even trend lines are subjective, so it's always important, but we can see sort of this big sort of reversal from here, and obviously price is sort of sitting on this 4 hour 15 MA, so it'll be quite interesting to see what happens from here. But that's just, like I said, just another one looking at that daily again. It's quite a lot of potential to the downside, and obviously as we can see, the previous high is sort of around this area as well. Next we're just going to look at the pound dollar. So firstly, I'm going to do another video on this one as well, because this is just an example of how sometimes strategies doesn't work, but you've got to see the bigger picture. So I actually did take a trade on this, and I took a 2% loss on it, which isn't a problem because of using the same strategies I've spoke about on the other ones. What we had was a sort of a 1 in sort of 4 trades that went against me, unfortunately. But that's part of trading. There's always going to be losses, but we learn from these losses, and that's the most important part, to know that you always learn from a loss. But as you can see here, we sort of have this trend line that's formed, 1 touch, 2 touch, last major high being the 1.35294 level. Then we have this ascending trend line here, and we sort of had this wedge, and we broke out this wedge, and we look like we've retested with the daily 50 MA in the 38.2 fib it was. So I did quite like it, the 1.3 significant monthly support / resistance level for this pair, so I did really like it, but unfortunately it went against us. It was only a 30-40 pip loss. But now I'm sort of intrigued to see whether we're going to get a third touch this trend line and maybe reverse from here at a different level, which will be quite interesting to see. Of course, if this does happen, then potentially we can see a nice reversal, and sort of the move I was forecasting is going to come at a later time, but maybe we'll reverse around the 71 or 61.8 and then make our way down to the 0 or the minus 27%, or even the minus 61.8. So let's go into the 4 hour and just see how price sort of sits in. Okay, so we broke this trend line, we made this new low, and then it broke back in, but as you can see, we're sort of faked out, but we're sort of consolidating, so I feel like we might even just come up a little bit higher and then reverse. If we just sort of adjust this trend line so it's actually on the 4 hour as well, we can look at how price is in. Okay, so as you can see, we've got maybe a little bit more to come, maybe a little bit of consolidation, a bit of not really too much movement. We might get a sort of reverse around these areas, but definitely something to look at and definitely one to consider in your watch list. Next, we've got the New Zealand Japanese yen pair. So we have sort of, once again, high lows, high highs, quite impulsive this one, breakthrough, made a new low, retested, daily 50 MA, 38.2 in this case, and then obviously we've got this sort of this zone sort of supply and demand, depends on what side of the market you're on, but it's definitely sort of a significant area to look at. So for now, we treat it as support, and if we can break through this, there's definitely some more downside potential. But I feel like it's quite a nice sort of trade if you can get in with the right entry. So on the 4-hour, we can see we've sort of made a double top, just like we saw in the previous yen pair and one of the ones we looked at. And of course, now we broke past this 4-hour 50 EMA, so now there is the chance to sort of have a much bigger movement. But also the other thing to consider is that we do sort of have this double bottom formation here, so it'd be quite interesting to see whether we sort of have anything from this. But personally for me, it looks like that's sort of not really sort of come to anything, and now we might reverse to the downside as we're seeing from this 38.2 after a double sort of top on that level. So next we're going to look at the New Zealand dollar, US dollar. Once again, similar setup. So trend line here, 1 touch, 2 touch, 3rd touch we didn't bounce off, we actually broke, and that 3rd touch, as we know, it's the most important break or bounce situation. Broke, come up, come back down to the, make a new low, and then we come back up. This rejected this 38.2%, and now we're sort of sitting in a liquidity zone here. And then obviously, if we break through, we hope for a downside, or we might break above. But I favour this downside potential still on this pair. If we go into the 4-hour, we can see the mini trend line that's been formed. So you can see 1 touch, sort of 2 touch, and then we sort of broke this as well, and sort of retested. So potentially there is downside potential still to look at. Next pair is the US dollar yen pairing. So we're just going to go back onto the daily, and you can see we're making higher highs and higher lows. We'll see this significant liquidity area here, and now we're sort of possibly making a double top on this 110 significant level. And it's important to notice that these whole numbers, price does seem to magnetize towards. And obviously we can see 107 here, significant area of support. 108, once again, significant area of support. 109, resistance, turn support as well. And then 110, of course, we're not really sort of coming above yet. So it'll be interesting to see how price reacts to this 110 level. And of course, the trend's been sort of slowly trending upwards. We had this big sort of breakthrough and then reversal to make this 2nd touch. But I feel like it's another one definitely to watch. But what we find is the consolidation here. As we know in the intermarket correlation, the US indices, which is the Dow Jones, and the Japanese indices, the Nikkei, are very closely correlated. And obviously in this case, it might cause consolidation within these pairs. But if we go into the 4-hour, we can see sort of prices sitting above that 4-hour 50 EMA. So if we get a break through that, we might see this downside potential. And then we've seen back to oil. So obviously looking at these trades, the ones that I'm sort of in already, I'm really looking forward to seeing how these progress over the week, and that's the important part. That I've got 4 trades here, sort of 2 or 3 of them are risk free with some scalings, so I'm confident in them trades, and that's the important thing. You get 3 or 4 trades that make your week. And what I'm going to do is I'm going to record a breakdown of my Euro JPY trades and put that up, so it'll only be sort of a 5-minute video, roughly just going through everything, what comes to that, and how I got, say, 190 pip trade out of that, without really doing too much with it. And then, of course, got the scalings as well. And there'll also be another video on my GBP USD loss, and just to show that there is both sides that come with trading, but it's important to understand that psychology and be detached from that money, so you're not worried too much about this, and you see it as a positive because it's a chance to reflect on your trading. And we can't win all the time, otherwise there wouldn't be no reason to be in the market, would there? And there would be no sort of winning in the market, because if everyone won, there would be no winners. Because if the market doesn't work like that, and of course that's how the bulls and the bears work. There's always a buyer for a seller, and there's always a bear for a bull. But I'll say that was obviously our first video in a while. Obviously hoping to get back on to you soon, and obviously start creating some new content for you guys with hopefully some different people as well. But I say, very exciting times. I've really got back into my trading, obviously cleaned my trading up a lot and sort of refined my strategy to work best for me. Of course, still at uni, so of course that's going to be interesting over the next few months to see how I can combine sort of my new level of trading and then also uni as well. Of course, as always, like and comment and subscribe, and I hope to see you on the next video.